How's it going, everyone? Welcome back to another video, and Happy New Year. It's currently Thursday the 2nd. I just got done watching a couple more videos from Al Brooks' course. This is the first section of the course, so each one of these numbers is an individual video, and I basically just keep track of my progress here. So I'm only right here currently. Like the last video I watched was just like 50 minutes. So this is a long course, but it's very detailed. He really breaks down how to read price action like really well in this course, and I'm liking it so far. So in a minute here, I'm going to hop over to the desktop recording, and I'm going to explain a change that I've made in my trading. And basically, I was looking at some of my losses, and I realized there was a very obvious price action mistake that I was making pretty consistently, and I don't know why it took me so long to realize this, but through watching some of this course and also doing some one-on-one lessons with my mentor, I noticed a mistake that I was making quite a bit in the previous year. And I think I have explained this in some of my other videos, but now I think I have an even better understanding of the change that I've made. So anyway, let's just hop over to the desktop right now. All right, so here we are over on the desktop. I'm going to try and illustrate this the best I can here. So let's say I have a level here. The market pushes above my level, and then it's slowly pulling back to it. And once it gets there, my thesis is we will essentially bounce off the level and start to head back up. So now, a lot of times in the past, I would wait for the market to come down to my level, and I would buy on a red candle like this. Like even if I just saw a little wick, like a little wick off the level like that, as soon as its candle would close, I would buy right there and just be a part of the downtrend. And a lot of times what that would do is there'd be a little bit of buying, and then the downtrend would resume. And keep in mind, this bar would usually be a 2-minute bar, because that was the time frame I would, watch the most. But something that Al Brooks says, and this is something I've, started to implement into my trading a little bit, is I don't buy bearish bars, I buy above bullish bars. So if I see something like this, an entry here on a 5-minute time frame gives me a lot more conviction than, just using a 2-minute time frame and buying the downtrend, hoping for a reversal. And I have multiple examples here of actual trades that I've taken to show you this. So this is one right here. This is a trade from all the way back in July. I had a little resistance here. It broke above it and pulled back, and the market barely started to wick off this level, and I went long there. So I bought on a very bearish bar, hoping for the bottom, and it came right down and stopped me out. Another example here, the market was pulling back to my level. I started to see a little bit of a wick off the level, so I bought on a red candle. Again, I got stopped out. And if I waited for the break of the previous bar's high, I would have had a really nice trade, because this ended up going back to the highs. And again, right here on this example, I bought this pullback on a nasty bearish bar. There's really nothing bullish about buying right here. I got stopped out, and we were not breaking above a bullish candle's high. So yeah, I need to stop doing that. Now I want to go to my TradeZella and show you some examples of where, waiting for more conviction actually worked. So on the 26th here, I had a pretty good trade on the RTY. Now I did cut it really early because it was holiday trading. I did not think this would have the amount of follow through that it did, so I cut it at like a 1.5R. But yeah, basically on the RTY here, we had the reclaim of the opening print and the 5-minute, opening range high right here. Plus we also had VWAP here, but I just don't have VWAP on this chart. And so I was looking at just the 5-minute chart. We put in a pretty nice hammer candle here right off the opening print. And so I went long right above that high. And it started to go my way pretty quickly, and I sold the whole thing just a few minutes later for like a 1.5R. It was something like this. Now I think a more reasonable target would have been the prior day high, which is up here at the 2280s. I really didn't have a reason to sell here. I think I just wanted to, because I was having a rough couple of weeks. December was kind of rough for me, and so I wanted to just have a nice base hit. So let's look at another example. And yeah, here is my dashboard for December. I know it's very, very ugly the first week. I think I explained this in the last video. I was going on tilt like every single day, blew multiple evals, and yeah, December was not a good month for me. But I was able to keep the losses very small in the last few weeks. 18th. I had a very, very similar trade on YM. I just traded smaller size on this one. So let's see, we had prior day high right here. We got back above prior day high, and we were putting in a potential higher low. I saw this 5-minute hammer candle close, and I bought right above that bar's high. And I'm pretty sure I took this off right at the pre-market high. So yeah, it went a little bit further, but that's all right. So yeah, entering using this system, or entering like this, is a lot better than just, buying on red bars, hoping that the bottom is in. And also using the 5 minute. I used to use the 2 minute a lot more, but I've been finding a little more consistency on, on the 5 minute. Another thing I have been doing is waiting for the first 30 minutes. Because when you wait for the first 30 minutes, market opens up at 8:30 for me. So at 9 a.m., right at 9 a.m., an hourly bar closes. And that can sometimes set the direction, So I'm going to go back to that RTY trade because I think it's a great example of this. Actually, we might as well check it here too. So just take a look at this. Right after the first 30 minutes, this was the hourly bar we got. A very nice failure to go lower, hammer candle, whatever you want to call it. And so I think that led to that next leg up. And a lot of times when I trade in the first 30 minutes, I get trapped. And so if I go back to this RTY trade here, let me take a look at the 1 hour. Yeah, so I waited for the first 30 minutes. We had a very strong 1 hour bar, and that led to a very bullish move up after that bar. So that's something I'm also trying to do this year, is to wait the first 30 minutes before trading and use the 5 minute time frame and stop buying on red bars. Now, if I go back to the dashboard, today it didn't work. And I want to explain something else. So I just got to trade the copier, and I'm trading 2 Apex evals at once, so I did not actually take 4 trades today. I took 2 trades. This one was a break-even trade from the pre-market, and then I just took a fairly small $100 loss on my 50k evals, and this setup was pretty much the same setup that I was just showing you before. Yeah, so on RTY here, we got a nice push above the prior day high, pulled back to it. Did I wait the first 30 minutes? Yes, I did. So waited the first 30 minutes, got a nice setup, a little breakout, pullback to prior day high, a decent 5 minute bullish candle. I bought it right above the high of that candle, and it went down and stopped me out. So a very controlled loss, control the red day. I didn't take any other, trades on my evals after that. And I think I already journaled through this. Yeah, I did. Taking a look at the 1 hour. Yeah, that was a very strong 1 hour bar. So I'd say that's a great loss. I can't really find anything wrong with that trade because it looked exactly the same as those other decent wins that I just showed you. So but yeah, one more thing. So on my old screenshots, on NinjaTrader, I have red and green candles, and I have the P&L showing when I'm in a trade. But now I've made some changes to my charts, and I have white and transparent bars, and I've also been hiding the P&L. So now I basically just show how many points I'm up or down. Because I need to stop thinking about the money. That's something that has also affected my trading in the past, is not focusing on the chart and focusing on the money. That has caused me to perform badly. So yeah, I think if I commit to making these changes and continue to study price action, I think I will do much better this year. So yeah, I think I'm going to end this recording for now. I'll probably watch a few more videos of the course here, and I don't really know what else I'm doing for this video. I might film myself at work tomorrow. I don't know, but I'll figure something out. So see you guys soon. Alright, you guys, it is now the next day. Market has been open for over an hour, and I see no setups that I want to take. We've had a pretty slow range day, like on all the main markets. On RTY, after the first 30 minutes, that hourly bar closed really bearish. So I was looking for a short entry. I was looking for a short maybe off the opening print. But after that, we went straight back up. So nothing is like super clear to me. So I'm just not going to take any trades today. And I do have to work today. And I'm going to have to bundle up because it is like 8 degrees right now. So it's going to be a very cold day at work. I have to wear multiple layers and stuff. So let's get ready for work. Okay, we got our van, and wow, it is cold out here today. I really hope this camera doesn't die today. I'm gonna try and get a few clips. I'm pretty sure the cold is just not good for batteries in general. This van just connected to my phone because it has CarPlay. I've got a pretty elite set of audiobooks here. We've got Atomic Habits, Can't Hurt Me, Best Loser Wins, and Trading in the Zone. And I also have The Mental Game of Trading by Jared Temler. Get the heat going in here. Alright, time to head inside. All right, here we go. Apparently the routes were reduced because of the bad weather, but I have almost 300 packages, so I don't know if I believe them. All right, time to go. We'll still get this done on time. All right, we're out here delivering at stoplight 12 or something like that. I'm in my usual area. I think I've recorded here before actually, but that was when it was warm outside. That was back when I didn't need gloves to deliver, but okay, we're done with our route. Yeah, today was certainly cold, that's for sure. I recently added this stock to my long term on Robinhood, Rivian, and had a very big day. It's starting to break out on the weekly chart. It'd be amazing if the stock got back up to all-time highs eventually. Alright, I'm back in my car now, so done with work for the day. I just turned in my key and stuff. Should probably turn this on, yes. So now I'm gonna head back home. I might hop on the charts for just a few minutes. There was a trade I was considering taking this morning, but I didn't take it because the market felt choppy, but it still ended up working out. Let's head home for now. Alright, so we're back home now. Just took a shower and ate and stuff. So this is the trade I was considering this morning. It was this double bottom pullback to this pre-market high and also the opening print, and we closed above VWAP, and this 5-minute bar looked really nice. It was a very large candle though, like from the high to the low. I mean, that's over 15 points. So my stop would have had to be 15 points on ES, that's kind of a large stop. But I mean, if I used 1 micro, that's really not risking that much at all. I was calculating the risk to reward. So it's actually a 17 point stop. High of day is not even a 1-to-1. If I targeted the prior day high, yeah, I could have got 2R out of it. And I'll bring up the recording here just to show you that yeah, so right here I was like setting up the risk reward tool, trying to figure out if this was worth it or not. With 1 micro, that's only risking like $90. And when I'm trading these 50K evals, I try to keep my risk between like 100 and 150, maybe 200 at the most per trade. But it's just hard because, you know, this is hindsight, and, you know, here it's choppy. There's no trend at all. But then it goes from ranging to trending. It's just kind of hard to know. Like, I don't know, should I have taken that trade or was it better to skip it? But anyway, another change that I'm, you know, trying to make this year that I think I forgot to mention when I recorded that clip yesterday, and this is something that my mentor pointed out. A lot of times I have skipped trades because the market came near my level, but it didn't quite touch the level. Even if the price action looked really good here, like if there was a nice 5-minute bull bar to buy above, a lot of times I would skip it unless it fully touched my level, and maybe even like dipped below it too. But I have to remember, I shouldn't be trading levels. I should be trading a price action and letting the levels just kind of guide me. Because I've noticed that going through Albrook's course, I mean, he doesn't even have many levels at all on his charts. Like, I think he just trades off strictly a 5-minute chart. I guess I'm not really far into the course yet, but yeah, so trading price action, not levels. That's something I'm trying to focus on more this year. So yeah, I think I'm going to go ahead and wrap the video up here. I'm going to start editing the video right now so I can hopefully have it out tomorrow morning. So yeah, if you made it this far into the video, thank you so much. Just wanted to say thank you again for how much we grew this last year. I didn't expect to be getting this many views, and I'm just grateful that I have this many supporters, even though I have yet to find success in trading. So that means a lot to me. I really do believe that if I try really hard to stick to these changes and just work on my mentality, that I'll have a much better year trading this year. So that's going to be it for this video. So thank you all so much for watching, and I'll see you in the next one.